All right, traders, good morning. This is Christian from Hertz Tribeca Trade Group, and this is a quick video on quadruple witching, just to help retail traders. I know this term is thrown around. You probably have an idea what it is. Some of you a real good idea, and you know what all the witches are. Some of you may not. You may have just heard it and know that there's a lot of things that happen on the third Friday of March, June, September, and December, but you may not know all the events that happen and the reason for why you see all the volume. So this is going to be a good video, basic, just explaining what they are. Just quick background. This is what I used to do for a number of years. I was a Delta One trader. I was also an ETF trader. So wore a lot of different hats in my institutional trading career, but spent a lot of time on a Delta One trading desk. What is that? Delta One, you may have heard that. I'll explain what that is as well. So it's basically, a delta of one, right? So it's not a Chuck Norris film. It's not Delta Force, which sounds really cool. But basically what it means is just one for one. So a derivative product versus a regular equity, but they equal the same, right? So for example, basic form, S&P 500, what is that? It's an index of 500 names. Before ETFs, only institutions could really trade the S&P 500, right? Because you have SPY, IVV, VOO. They all track the index of 500 names. There's also futures, right? That S&P futures that track the index as well. But that's all one for one, right? So those products, while there's 500 names in the S&P, and the ETF will go ahead and track those 500 names, that will one for one equal the 500 names. So of course, if you really wanted to, and if you had the money to do so in a program trade, you could trade the 500 names just as you would SPY, but they all equal the same. So Delta One, and there's no optionality on a Delta One desk for the most part. So those are the desks. That's one of the desks that's trading it. It's a little bit about my background. So let's just purely go into the definition of quadruple witching. And you could just I pulled this up on Investopedia. You could just Google what is quadruple witching, and you can get a quick definition of what happens. Right. So first of all, quad, right? Quad is four. So they're going to talk about four things. There's actually five things, and I'll get into the fifth thing, but let's cover the four first. So two of which you only really have to worry about on the open. There's two things that happen on the open. And then you could see in the background here, I've got the S&P E-mini contract, right? So this is for trading S&P futures. They have now switched, and they do this ahead of time. They switch from March to June, a week before quadruple witching, but there are still a lot of contracts outstanding. So front month, just like for options, front contract is now June, but there's still a lot of contracts that are still out there. Why do people still own these? A lot of times their institutions are doing an arbitrage, right? So they own, again, Delta One, they may own the 500 stocks that go into the S&P versus a futures position, right? There may be some kind of price dislocation going into today, but basically what has to happen is they unwind that position because it's no longer in existence after the open. So how do they do that? And again, this is mainly, when I talk about quadruple witching, a lot of it is big institutions that are dealing with such flows. So they have to put down all their orders to offset futures expiration. That has to happen on the open. So they'll put down on the open what's known as market on open orders, MOO, right? So they'll put big baskets of stock on the open to make sure that they've got the right exposure, because again, that contract is going away on the open. It officially expires. Where does it expire? What's known as the special quotation pricing. That's called SQ. And how they determine that price is the opening of all the 500 names. That price, and then there's a little bit of a calculation behind the scenes, but that's how you know what that special quotation pricing is for basically the expiration of that contract, right? That gets put on what is it, the CBO, or the excuse me, the CME website, and that won't be done. They won't know that price until, of course, after the open. So what you will see, and then the other thing, sorry, before I finish that thought, the other thing that also expires on the open is single stock futures, right? They're a little bit less. They're not going to drive the volume. It's more the index futures, right? It's not only the E-mini, but it's also the NASDAQ. It's also the Russell and the Dow contract. All of these index contracts expire on the open. So what you will see is big volume that happens on the open. And people will be arbing that. People will be looking at the market on open imbalances, and they'll be trading into it. They'll also be trading after it. But if you see big volume in, you name it, Facebook, Apple, all the 500 all the names in the S&P 500, it's just going to be on the open, and then it kind of trails off after that. It's kind of an event. So I'll kind of skip ahead a little bit, and on my list here, what to be mindful of. I personally would not be, as a retail trader, would not be trading on the open or around the open. Give it 5 minutes to settle down the volume because of all this arbing that's going on and expiring of the futures. After you get through the first 5, maybe call it 10 minutes, that event is basically over, right? You don't have to worry about it, but be aware of that big volume, and that's what it's being driven by. All right, so we covered 2 of the quad witches, right? So let's talk about the other 2 that happen on the open, and these are probably 2 that you know about, right? So let's go back to the definition here, and it will basically say it's your option contracts. They expire every 3rd of the month. What else? Also, I think index options as well, right? So those are the other 2, and you know about those because those not only happen every quarter, but they happen every month, essentially. So that's the other portion. Of course, just like any option expiration, there will be a lot of volume. Now, the 5th witch is much more important than those last 2 that I discussed. That's index rebalancing, right? So a lot of I would say a decent amount of traders don't know that this happens, but the S&P, the NASDAQ, and not only just the S&P, but the growth indices that they manage, the value indices that they manage, the sector indices, so your XLF, your XLK, your XLY, your XLU, plus your what's known as your equally weighted sector indices, your XRT, your XBI, there's a few, XOP, which is energy and gas. All of these indices, they rebalance, right? So why do they do that? Why do they have these index rebalances once a quarter? Because there is what's known as benchmark weight. Every index has a benchmark classification that they need to adhere to, right? So for example, Dow, which doesn't do any rebalancing except for one-off changes when they kick somebody out and put somebody in, that's price weighted. That never rebalances except for those one-off. S&P is different. It's market cap weighted. It's actually market cap float adjusted. But in order to adhere to that, and I'll go ahead and bring up the S&P index, but in order to adhere to that benchmark, they need to make sure that it looks how it should. And the only way that they could do that is, well, they could do it other ways, but the way that they've decided to do it is they've decided to do it once a quarter. So they basically will align the position, the shares, to make sure that they're exactly market cap float adjusted weighting. And what happens between, let's say, last index rebalance, which was in December, from now on is that the one variable changes is price. So some names will become larger, bigger than in the index than they should be, just because they rally between quarters, right? And some names will sell off. And you could see that's most dramatic when you look at an equally weighted ETF. So if you look at XRT, which again, so what is equally weighted, for example? It means every name gets the exact same representation in the index. So if you see that, if you look all the way on the right, you see some names, it's close, but some names have 1.8, 1.7. Some names, if you go all the way down, are only 0.2. Whoops, went a little bit too far. 1, 2, 3, 4. There we go. So some names will only have 0.4 versus 0.3. So if it's equally weighted, why are some names smaller right now, have a smaller percent weight versus other names? Because some names have done very well and some names have done very poorly since the last index rebalance. For example, Land's End is only 0.4% of the weight. A couple other names that just stand out. Macy's has had a bad quarter. Their price has, I believe, fallen. Walgreens, WBA has recently sold off. So that's why it's a smaller percent weight. Tailored Brands is another name I see down there. Recently had bad earnings, was down like 20% or something like that for earnings. So again, that's why it's a smaller weight. And then you go and if you look at the top weights, what's the top weights? These are names that have done really well. Carvana, Boot Barn, Wayfair, Stitch Fix, Abercrombie, Rent-A-Center, JCPenney's up there too, which is surprising. Etsy, Ulta, these are all your outperformers. So when you come and you look at the index on Monday, the weighting scheme will be drastically different. They'll all be aligned together. And you can look at another one too if you want to look at XBI. It's the same concept. So essentially what has to happen is the Spark is one, of course, Puma is another one that's rallied very, very hard. So as long as there's net assets, remember in these ETFs, there's long assets and there's short assets that track. There's short interest and there's obviously long assets that track them. Provided that the net is positive, that there's more assets tracking than shorts, what'll happen is the winners, the names that have done really well, will have to be sold, and the names that are underperforming will actually have to be bought. Now, this will all happen. This all happens. The benchmark is the close. So the closing print is most important. That's where you see all the big volume that has to take place for the index rebalances. However, portfolio desks, Delta One desks, they look at these numbers. These numbers were all released last Friday, the official numbers. So you could go to the S&P. Now, of course, you can't bring this up because you have to pay for the data, right? This type of data is not free. But you could go to the S&P site or you go to the NASDAQ site. You could look at the news and announcements, and they'll basically just tell you in a news release that this index and that index is being rebalanced. They won't show you what it looks like until Monday, right? Because you have to pay for the data to see what the new index is going to look like. All right, so again, last Friday this happens, and there's a lot of what's known as gaming, right? I mean, everybody will basically anticipate. There's one or two people on every portfolio desk at an investment bank that will crunch all the numbers, right? So we looked at XRT. That's just one index. So, so those winners that have to be sold and the losers that have to be bought, that's in just that one index. Keep in mind, many of the names are in multiple indices. So there's a trader that will crunch all the numbers on a portfolio desk, net out all these indices, which there's a huge number of indices these days, and it all depends on the assets that track the index. If there's no money that's tracking an ETF, then there's not going to be that much of a rebalance. If the S&P is the largest one out there, so there's a huge amount of money that's tracking not only the S&P, not only SPY, but also IVV, VOO. So the more assets that track, the bigger the rebalance. It's one of those things that as ETFs get larger and larger, the bigger the index rebalance is. So let's go back to the little cheat sheet that I have here on Word. I think we talked about the 5 different witches. Some occur on the open, some occur on the close. Who are the traders? We talked about Delta One desks, portfolio desks, but mainly institutions. This is all institutional trading. Retail traders, what do you want to watch? What should you watch for? What to be mindful of? Basically, you kind of want to just get out of the way a little bit of the open, and you want to be aware of what happens on the close as well, because there will be huge volume on the close, and the price action can be very whippy, depending on the name, right? The smaller and the more illiquid name, the more impact. Apple, not so much. Names that trade a lot, they can weather the amount of volume, but your smaller names are really going to move around quite a bit. And then what to take note of if you do a lot of technical analysis charting. This will be the highest volume day of the year of 2019 so far, right? Or it should be. That's my prediction. So if you're analyzing charts on Saturday or Sunday and you're like, "Ooh, what's all this volume? What was going on in this name?" And I don't see any news. Maybe something's going on. It's due to quadruple witching. Really, don't draw any major conclusions from it. Just kind of look and be mindful that every single name in the S&P 500 is going to have this outside volume. So don't rush to kind of think that something is going on. I saw that question a lot this week in names that didn't have any news, but what's all this volume? Because again, the volume will lead into Friday and into the close, but all of these names, the news gets put out last Friday, so all of these institutions will go ahead and trade ahead of the number. So anyway, I hope that helps. That's quadruple witching explained. Thanks very much for watching and have a great day.